name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of Paris rapeseed, Winnipeg canola and Malaysian palm oil markets. I'll start with Paris rapeseed. 4 weeks ago we had a weekly key reversal up. I mentioned it at the time and I was unsure about it because the following week prices traded with indecisive spinning tops and indecisive doji crosses all that week, bar the Wednesday. It was the week after Easter and it seems everyone was taking it easier a bit. However, Tuesday 2 weeks ago saw a big move higher, breaching the 2013 high at 464 1/4. On the Wednesday, prices really started motoring, with new highs not seen since early last decade. Only Friday of that week showed any hesitation, even with a new recent high at that time. However, this was soon dispelled Monday last week, as the bullish move higher continued, with prices peaking at the high last Thursday, over the upper time, currently at 512 1/4 of the February to March bullish Andrews pitchfork. I said last week that I was not convinced of the lower or upper times of this pattern. However, the market, it seems, has recognized this, with only the one close last week above the upper time and the subsequent drop back on by this Friday's bearish engulfing pattern time, halting at the lower time, currently at 478 3/4, and reversing back up in a hammer pattern yesterday that interestingly did not close or open below the very recent projected 50% Fibonacci line of 487 even. I'd now like to talk a little bit about that bearish engulfing pattern. It is a type rather than a straightforward bearish engulfing pattern, as it engulfed a previously already bearish pattern in action. Now, I've seen this type before and I have usually treated them as straightforward bearish patterns, but it is worth noting. Today we're played either side of the middle time, currently at 495 1/2, and I suspect it is the market making up its mind whether to move back up or return lower. At the moment it seems bullish incentive still in the ascendancy. Winnipeg canola. 2 weeks ago the market shot up off the combination of the uptrend, the short medium moving average currently at 756 1/2, and the short moving average currently at 785 1/2. By Tuesday of last week, with a new all-time high close, and the next day prices punched up and closed over the new all-time high from March, and that was at 810 even, coincidentally a GAN number. This continued last week until the Friday, when we had a before the weekend bearish harami. Yet that didn't last long, as prices made a new all-time high, but also, and this time it is important, an indecisive spinning top with a long tongue at the height of the market. Something you don't really look for when you see moves upwards. Yesterday we had another indecisive spinning top, though this time with a long tail. I suppose between the two of them they could have created just about one decent equidistant indecisive spinning top. Anyway, yesterday's action was interesting for two reasons. Firstly, the market's close was below the upper time of the January to March bullish shift pitchfork, much like most of the week of this week and late last week. Additionally, the low of yesterday was halted and spun around by the combination of the 810 former high and GAN number, as well as the middle time currently at 813 1/4 of the bullish Andrews pitchfork of the same January to March move. Now, I had drawn both of these pitchforks in an effort to find the bullish angle of attack. A week later, I still can't choose which it is. So we come to today's action. Right now it looks like we may have a bullish engulfing pattern. If that is the case, and it is exploited next week, then the more acute bullish Andrews pitchfork will ride supreme. But wait until it is confirmed. Bursa Malaysia crude palm oil. So, we have a mid-October 2020 to late January 2021 bullish shift pitchfork, showing the bullish angle of attack of this market, particularly the middle time currently at 41.40. Additionally, we have a newer, slightly more acute bullish shift pitchfork for the January to late March move, with the middle time capping the market currently at 42.82. Current situation is that the market is in between both middle times, more or less. Plus we have two islands, one below from last week and one only slightly above from 6 weeks ago. Not really sure how to acknowledge these two islands other than to simply realize that they are there and aesthetically seeming to balance each other out. Much like last week, I am not currently aware of any other patterns of significance here, bar obviously the two bullish pitchforks. But I will continue to monitor the situation, especially as we come closer to the high of March at 43.17. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. Here comes the final bit.